It's the beginning. So we're just beginning in this massive cycle where we move to a digital world. I think 75 is the new fair value. Well, we'll move from now to the halving to the 50. Then post-halving, 50 to 75. How fast? I don't know. It doesn't really matter. In the previous cycles, we went 2.3 times to 2.6 times fair value. Let's say this time we only go 2 times fair value. That seems fair. So we go from 75 to 150. Somewhere in that 150 range seems, I won't say guaranteed, but seems highly logical for the high point of this cycle. What people forget is, for whatever reason, they're like, no, I should have a diversified portfolio when I'm young. No, you shouldn't. You should have a super concentrated portfolio when you're young, because you already have this big piece of fixed income, which is your future earning. If you're here, if you're listening to this, we've already won. It's inevitable. Name a technology, anyone, name a technology that once it got to critical mass, you put it back in the bottle and it went away.
Mark Yusko has some news for you all crypto enthusiasts who are considering whether to dive into Bitcoin or not, or for those of you who want to know how well your investments in Bitcoin are going to fare. He even has an explanation for the reason why Bitcoin price actually dropped after the ETF approval, though we were expecting that to lead to a spike in price at the initial stages.
There was a little known change that was happening the same day as the approval of the ETFs, which was there was a new line of futures being introduced at CME. And basically what that means is there were going to be a whole bunch more short sellers on the other side. So I think what happened, I don't have any inside baseball, but what I think happened was some of the big dogs accumulated Bitcoin leading up to the launch and, in accounts. And that pushed us from kind of 40K up to that, momentary spike to 47. And then you have the launch, and they start selling to themselves, right? So they can secure supply. But then the people shorting the futures jump on, and you had the, flash crash down, and everybody says, oh, see, it's a total failure. I'm like, what are you talking about? You don't judge a launch in minutes or days.
So what does he think about the market cap for Bitcoin in the coming months?
I made a statement leading up that, there's 30 trillion in accounts managed by UBS, Merrill Lynch, Raymond James, Vanguard, etc., controlled by, advisors, boomer money. And I said at least 10 basis points of that is going in this year. So that's 30 billion. I actually think 1%, 100 basis points, is going in, and that's 300 billion. And I think I'm right on this. That 300 billion would be more fiat converted into Bitcoin than all of the history of Bitcoin. And I can't prove that, but I think I'm right in that so much of Bitcoin's market cap is not $1 went in and $1 market cap. It was $1 went in that's now worth $100 or $1,000 or $25. And so that 300 billion that I think is coming is going to move price pretty dramatically in the future. I think people are missing is the halving coming up in a couple months, and that's going to double the fair value. So fair value today is somewhere low 50s. We'll just call it 50 to round numbers. The halving doubles fair value. Well, why is that? Well, you think about it, if the block rewards get cut in half of the miners would suddenly go out of business because their costs are fixed. So the price actually has to rise. Well, it doesn't have to rise, but it does rise because buyers and sellers are going to equilibrate, and no one's going to sell unless they get a better price because they got to cover their costs. So there's a supply-demand change, and because the supply shrinks and the price goes up. So that's interesting. So that says that the fair value would be 100. Well, by summer this year, we'll enter what's called crypto fall. So we're in crypto summer right now. Crypto fall is where we get the parabolic craziness. And it's likely that, through year end this year, we'll have some craziness. I don't know how high we go, but we'll probably go really high. Then, we'll have another bear market and we'll enter crypto winter, in 25. It's really insightful to understand the nuance of multiple things. One, the law of large numbers says that it's harder to go up a lot on a big number than it is on a small number. That's why I tweet out, hashtag chart crime all the time. So people show all these hockey stick charts over long periods of time. You can't show a long-term chart without log scale, because going from 10 to 20 is different than going from 20 to 30 or 30 to 40. You have to use log scale. And then they don't look so parabolic. They still can go up, but they don't make these hockey sticks. And so this idea that we're going to have the 40x move like we did when it went from $1 to $40, well, it's a hell of a lot harder to go up 40x when you're $100 or $1,000 than it is when you're $1. So that's the first thing. The second thing is leverage is what really drives the parabolic blow-off number. So whatever that number is, right? When you're under fair value, normal investors are buying, because that's what investors do. They accumulate assets below fair value. They don't like to buy above fair value, but they will. And then a speculator is actually just the opposite of a hedger, right? It's actually a term of art. So if I'm an oil producer, I have to sell my production forward in the futures market. So I'm a hedger. I need a speculator to come in and take the long side of that sale. Same thing with, I'm a Bitcoin miner. I need to hedge my production. I need a speculator to come and buy. So that's not good or bad, but that speculator is providing capital, net new capital, that moves the demand. But then the gamblers come in, and the gamblers borrow money to increase the amount of demand even more. And that's where you start to get this parabola. So two things I think happen this cycle. One is, I believe the halving cycle, the doubling of fair value, is contingent on the fact that block rewards are cut in half. Therefore, miners would be in trouble if the price didn't move. But what about ordinals? Now we have ordinals and we have transaction fees. So let's say, and again, I'm going to make these numbers up. Let's say that impact is 50%, meaning we're going to have 50% less upside from the reduction of block rewards because the miners can make up some ground through transaction. So let's say we go to 75 instead of 100. That's actually where I think we're going to go. Call it 75 to 80. Just to be conservative, we'll keep it 75 because of transaction. Now, I guess if Luke Dasher gets his way and we fork off and we have no more ordinals and no more transaction fees, then we're back to 100. But I don't think that's going to happen. I like him, but I don't think that's going to happen. I think 75 is the new fair value. Well, we'll move from now to the halving to the 50. Then post-halving, 50 to 75. How fast? I don't know. It doesn't really matter. So then we get 75. Well, now the traders and the speculators and eventually the gamblers. Well, this cycle, I think there's less leverage, right? They clamp down on Binance and they clamp down on Voyager and Celsius. And so there's just less leverage. So let's say in the previous cycles, we went 2.3 times to 2.6 times fair value. Let's say this time we only go 2 times fair value. That seems fair. So we go from 75 to 150. Now, that 150 has some volatility to it. You can't predict a point. So if there's more speculation, you get a little higher than 150. If there's less speculation, you get a little less. But somewhere in that 150 range seems, I don't want to say guaranteed, but seems highly logical for the high point of this cycle. Does it have to be 150? Could it be 180? Sure. Could it be 120? I don't know. I've seen a lot of smart people predicting anywhere from 100K to 120K, 104K, Tommy Mustache, Tim Peterson's at 104K. Somebody else was at 120. Now, Max is out there. Oh, it's going to be 250. There's going to be a God candle. Like, I love Max. I love Stacy. I don't see that. I think there's not enough leverage to get us there. So, I'm a 150 guy.
If Mark Yusko's prediction is true, then literally, we have less than 2 months until the halving, which means limited time if you want to seize the opportunity. Make sure to subscribe to the channel for more insightful investment tips like this.